Well, it's been a wild ride in the stock market in the last few weeks. So what's going on? Here are my thoughts on this edition of the Video Market Update. So you can see here on these indexes that went from July into the beginning of August that we saw quite a bit of volatility. We had gone a fair amount of time this year with not much. Then we saw a little dip towards the end of spring, and then everything seemed to smooth out again. And July came and the wild ride began. You can see that the indexes were somewhere between flat, down a few points, and even up a few points. The Russell's 2000 was up about 7.5%. Well, that shows us a few things. One, it shows us the most important thing is diversification, because as money sells out of one index, it will then either be allocated towards cash or reallocated into another sector or segment of the stock market. So why the big drops? Well, the easy answer would be, well, this is the stock market. It goes up and it goes down. But why the drastic ups and downs? Why did we see the S&P down 2% one day and then see the Dow Jones up 600 points the next? And then a few days later, like we saw Friday, the Dow tumbling, at some point down 5, 6, 7, 800 points in one day. Well, there's a few things at stake. One, jobless claims and the unemployment rate went up because of lower hiring. So we saw those two reports last week. The manufacturing index, which is a sign of recession fears or the sign of the strength of the economy, was expected to be soft, and it came even softer. So that was sparking some recession fears. The other is we saw weaker than expected second quarter earnings for some of the biggest companies, the Magnificent Seven, the Alphabet, Amazon, Facebook, Apple, Nvidia. So when you see all those things together, it shows or highlights that people are starting to have some recession fears. Now go back over the last 3 years, and anytime we talked about inflation and interest rates, I had mentioned the idea of a soft landing. And I may have been the last person in the wilderness that believed that it was possible who wasn't working at the Federal Reserve. What is a soft landing? The soft landing was the idea that the Federal Reserve could raise interest rates, increase the unemployment rate, lowering inflation and not causing a major recession. Maybe a minor recession, but not a major recession. Well, for that to happen, the Fed said we need unemployment to be between 4.5% and 5%. Well, we're at 4.3%. So if the Federal Reserve sees that the economy is softening, unemployment's going up, stock market is jittery, it may give them the signal of it may be time for an interest rate cut, and it may be time for more than just one this year. And if that happens, I think this momentary wild ride in the market, which we may be in for a few weeks, may reverse, and we may close out higher if interest rates are cut and the enthusiasm comes back to the consumer. They spend, that drives the economy forward, and it drives the stock market back up. So there are some bright spots. Nvidia's rebounded well, Apple's rebounded well. But again, there is a softening. There's a feeling that there's a slowdown coming. And although we don't want to see that, if that gets interest rates back in line, that may be an overall boost. So this may be the storm before the calm. So we'll wait and see, but if you hear anything or have any questions, let me know. And as I have more information, I will let you know. But if not, as always, I hope you make it a great week.